Thank you everyone for tuning in. We have a very special guest today, and we're going to be discussing the recent executive order on cryptocurrency, its impacts and implications. So I'd like to start off by thanking Mr. O'Leary for taking his time to be here today. We always appreciate your presence. Some know him as Mr. Wonderful, and he is no stranger to this sub. But we're here today with the legendary Kevin O'Leary. Kevin has many titles, including entrepreneur, author, politician, and many of him know him from Shark Tank. I think, does that cover everything, Kevin? You may have to unmute yourself.
Yes, that's great. And I'm also a chef. I just wanted to throw that in there.
And a chef. Awesome. Well, Kevin, you're a ruthless investor with a track record to back it. You like to invest in solving problems, and the retail consensus is that crypto is mostly speculation. Is that the reason you joined Team Crypto, or is there a problem that you see needed solving? And if so, what?
It has a speculative aspect to it in terms of its price volatility. There's no question about that, but that's not the way I look at it. I don't consider Bitcoin a coin. I consider it software. It's software. Ethereum is software. HBAR is software. Polygon software. Solana software. These are software development teams. In most cases, I've met them all, and I've invested in them. And they're trying to solve primarily financial services transactions and other issues, and do it more productively at a lower cost, more transparently with audit features. And so, to me, that's the productivity software development. And I don't know why, if I own, as I do, Microsoft and Alphabet and Google and everything else in software, why wouldn't I own this? And so, I understand because it's a nascent industry, that people are skeptical, but that's the time to be an investor. You want to get in before the institutions do, and right now they're not in it yet because the order has just started. But we've had some real milestones occur in the last 2 weeks. Number one is the Loomis bill that's going through a bipartisan committee in Congress, which is great. I had a chance to visit with the senators last week in Washington, a bipartisan committee, so that's pretty rare in Washington. And then, of course, like everybody else, I read the Biden executive order. And most of it was very good news, because it basically says we've got to be competitive, we've got to regulate this, and which I think is good because it's going to get institutional capital. But there is one landmine sitting in the Biden executive order, and it's around climate. And that is a direct shot across the bow of Bitcoin miners.
Yeah, I think we just saw the EU voted against the de facto proof of work ban. And I've heard you mention the Norwegian model. Do you think that cryptocurrency will be a major driver for renewable energy sources in the future?
I do, but I think it's going to morph to the Norwegian model, because let's talk about the situation we have now and what we have to get to over the next 2 years. So let's just speak about Bitcoin mining. Let's start there. And so what has been done for the last couple of years by major sovereign and institutions who are not allowed to own Bitcoin, or Ethereum for that matter, is they have used the shares of public mining companies, primarily in the US, such as Hive, Hut 8, Marathon, Riot, and others, as a proxy. Because if you look at the share prices of those stocks, they really are very in sync with the price of Bitcoin. Bitcoin, gets cut in half, and so does the stock prices of these companies. So it's a good proxy, and they're of course allowed to own the shares. However, from the president's order and the new ESG mandates that are coming out of institutions like BlackRock, where they're starting to ask for audits, so that if you declare that you're carbon neutral, they're asking that you show that as along with your other audited statements each quarter. Proof that you're carbon neutral. And so most Bitcoin mining companies, although they try to become 100% ESG compliant by using, sources of energy like hydro, wind, and solar, are not. So maybe they're 50, 60% compliant. And the other 40%, they simply buy carbon offsets or carbon credits. Well, that's where the model falls apart. The major audit firms are not going to sign off on carbon credits. There's no way to audit them. The tracking error is so huge. It's like saying I bought a piece of the Brazilian, rainforest, and therefore I'm carbon neutral. There's no way to prove that. And that's why, well, for me anyways, I can't speak for other investors. The minute I read that order, I sold every one of those stocks, and I won't be buying them back. They'll never survive an audit. And the more pressure they have, the worse it gets. So there's going to be a new model emerge. Capital will go to the Norwegian model. Now, the Norwegian model is completely different. It works this way. You find a site in a country like Norway or Quebec or Montana in the US, for example, or upstate New York for that matter, that has excess hydropower available, somewhere between 1 and 4 cents a kilowatt hour, and you form a contract. Either you buy it on spot pricing or you buy it in a locked in price, and you start to build your data center. You're not using any other source of electricity because that electricity, when it spills over the dam, is unused. So if the dam is only using, let's say, 20% of its potential, you're taking a portion of what's not used and converting it into value in the form of Bitcoin through a data center. And there is no need for a carbon audit because there's no carbon whatsoever. And so institutional capital will move away from, let's call them, for a better word, the dirty miners, to the clean miners. And so most of the deals I'm seeing now and I'm investing in are private at this point, like the Norwegian model. That's a private company that moved from upstate New York when the policy became unstable, moved their facilities to northern Norway. And what they've done is they've put up the facility in a village of 3,000 people. The mayor is a stakeholder in the facility. They're also taking the heat from the stacks and providing heat for a hydroponics facility that grows tomatoes, and they built a canning plant beside it to can those tomatoes. They also provide excess capacity to the local university and educational facility. And the stakeholders in the village support this construction because they're working there. These are high-paying jobs. They're building this out, and they started. The target is 300 megawatt, but they'll build it bigger even. But that model, there's no reason that model can't go into upstate or up province Quebec. And that company is talking to Quebec as well as Montana, where you have the same situation. You've got to find that source of power that is not being used and converted. And from that perspective, these new world miners, if you want to call them that, are providing a very important service. They're capturing the value of unused power into Bitcoin forever, which is a very good thing. And of course, they pay their taxes and they provide jobs to the local citizens of the communities they're building in. This is the new model, the Norwegian model. BitZero is not the only company. It's just the one that I invested in because it became available when it moved out of New York. But I'll invest in others that do the same thing. But what I'm not going to do is invest in data centers that end up in a situation where they're basically trying to tell you they're carbon neutral when there's no way to prove it by buying carbon credits. I think that's all BS, and it's going to be flushed out that way.
Yeah, absolutely. It's great to hear Bitcoin mining really creating kind of blossoming ecosystems, it sounds like, at least for the example you gave. There's a little follow-up question from the audience for you regarding the climate issue. A well-balanced perspective coming from our elected officials is apparently too much to ask for. It's either Bitcoin is a solution to everything, kind of like Senator Loomis, who I would side with, or Bitcoin is the worst thing ever, kind of coming from the Warren camp. These one-sided agendas fail to recognize the amazing work and progress that's been happening in the space, and we really wish that they could do their homework and make a little clarity here. Can you tell us or detail a little bit of your path from being a non-coiner to where you are now? Because you're clearly much more into this space. I think I remember you saying something around a 1% or 5% allocation, and you've bumped that up to about 20% now in cryptocurrency. What path did you take to maybe change your mind or get more sold on this idea?
I think if you want to be a successful investor in life, you have to have flexibility. You can't take a hard stance on anything because when the environment changes, so do you. You have to change. My work and the change that has occurred to me is by meeting the development teams on all of these different blockchains, level 1, level 2s, and everything else, and cryptocurrencies, and seeing the potential productivity that these developments have. And I can't know, and no one can with certainty, which will be successful. Will Solana eventually, overtake Ethereum? Will Ethereum eventually get to work of stake? All of these issues are unknowns. But I can, as an investor, apply the same diversification strategy that I've had in every other asset class, and I'll tell you what it is. I look at the S&P 500, and there's 11 sectors in it. And I believe that over the next decade, blockchain and cryptocurrencies and the financial services productivity that they provide will become the 12th sector of the S&P. So the way I look at it when I'm running a mandate, let's say I have $100 billion, I'm an institution or I'm a sovereign fund, normally those mandates look like this: no more than 20% in any one sector, no more than 5% in any one stock or bond. And I've done exactly that with my foray into crypto. So I now am at 20%. And within that portfolio, which is a very big commitment to this space, I vary my position holdings from 1 to 5%. So how much Ethereum should I own? How much Bitcoin? How much Solana? How much HBAR? How much Avalanche, Serum, Helium? I own all those, and I vary their size based on any portfolio mandate that, based on my optimism for these development teams and what they're doing. And I'm very, very fortunate, I guess. Sometimes it's good to be Mr. Wonderful. I get to talk to all of them all the time, and I'm very interested. I've been investing in software developers my whole career, and I really believe this: the smartest hands over keyboards now are working on the chain. They're working in crypto. Why? Because they don't want to work for the old economy. They want to be part of the new economy, and the potential of making major change is at their fingertips, literally.
Yeah, this is a little thought I've had recently. Would you say it's fair to say that proof of work mining is creating almost a universal market for energy?
Yes, I have come to the conclusion after seeing the Norway model that this is the future. There's nothing wrong with proof of work because they are developing some very advanced technology to reduce the requirement for power and at the same time enhance the speed. Who wouldn't want that? I mean, people should realize a Bitcoin mining facility is a data center. That's what it is. And data is the new oil. So you want to build the most efficient data centers you can, embedded in the community that supports you. And that's exactly what the Norway model is. And I think, I think that facility that's being built out by BitZero, all the officials that we're going to build, that the company there, the management has made it their keystone site so they can bring any government to come and look at it, see how it works, meet the mayor of the village and all of that, and say, let's do it in Montana, let's do it in Quebec, let's do it in New York, let's do it near hydro. 90% of the dams built in America on rivers and waterways were built with turbine facilities ready to go. 90% do not have those turbines in them. They could be deployed with policy. So in other words, in the infrastructure bill, we could start putting turbines in those dams and use them to really provide for data centers in the most cost-efficient and ESG stable way. And that's what I want to invest in.
Yeah, I love it. There's an overflow of energy at times, and Bitcoin's ready to absorb it. I think that's an amazing stance. Maybe we should get to the main topic, which is the executive order. To me, it's been insane how fast everything is moving. It seems like a month ago, 2 months ago, cryptocurrency wasn't on the radar. Now it's the headline and news almost every day, at least from my perspective. What do you see as the main objective for this executive order?
To show that the government has made a decision towards regulating this and making it something that will become part of the economy. It's very important that 90% of that order is very good news. Now, because we have embedded within this administration a very strong ESG mandate, and that's not good or bad. It is what it is. It does catch the existing Bitcoin miners who put all these billions of dollars to work that had no idea this truck was going to come running down the road and run them over. It's unfortunate, but in many nascent industries, the pioneers get the arrows in their back. Everybody's learned from the fact that you can't use these carbon offsets, you can't audit them, that not to go that direction. So think about this. This is what's so interesting about this situation. And again, you have to give credit to the crypto community for it. You've got government policy in harmony with private policy for one of the first times ever. BlackRock's the largest money manager on earth. They agree with the ESG mandate. So does the government. And that's forcing capital, investors like me, to wake up and smell the carbon credits. I don't want them anymore. I want to avoid carbon altogether. And that's exactly what's happening. When you talk about hydro, when you talk about nuclear, when you talk about clean hydrogen or wind and solar, we're all investing there because we don't want to be caught up in this debate about auditing for carbon credits. So they've effectively changed investor behavior. That's really hard to do.
Wow. Yeah, I was going to ask you if you thought it was positive or negative. It sounds like positive. I mean, I would agree with you. But from an institutional or accredited investor stance, maybe are there any specifics that you would say are specifically positive for it?
Well, what we've got to realize is that when a president does an executive order, it's a big deal. And what he's basically saying is we got to get our hands around crypto. We've got to have policy on it. So we know that crypto's not going away. We know that it's not going to be made illegal. We know that it's going to get policy which will attract institutional capital by the billions. All of that's good. But we also know there's going to be some winners and losers. And I think what was a little difficult to absorb, and I go back to this again, is there's billions of dollars invested in these mining companies, the Marathons, the Hives, the Hut 8s. Well, effectively, they're screwed. And if they have to be thrown under the bus, I guess that's an unfortunate outcome. But what institution is going to fund those models when they have carbon credits and audits? It's kind of, I guess you have to realize there's going to be some sacrifices, and they are the ones lying on the track as the ESG train runs them over. But that doesn't mean there isn't money available to build the Norway model. There is, and that's coming.
Do you think they'll be incentivized, those companies that already exist, to lean in that direction, or do you think it's kind of lights out for them?
No, they have every incentive to lean in that direction, but they're not going to be 100% compliant. They're going to have the legacy stacks that are dirty stacks. So I think what would happen is there'll be a consolidation in that industry of the dirty stacks. And while they can continue to get coins awarded, they'll do that. But they may eventually get shut down. I mean, these threats like the EU thing you saw today, that's not going away. I think it's going to be like the China situation. If you're mining dirty coin, you're going to get shut down at some point. I don't know when, but in the meantime, they should scramble and do whatever they can to get compliant and get into hydro or get into nuclear or get into something that's sustainable. The market has spoken. It's spoken, and it's happened in a remarkably fast way.
Yeah, I love it. I love it. I guess to lean into this, do you think that this executive order, because I do know it was kind of on the books or in the works for a little bit now, but the timing of it, do you think that this is directly in response to the conflict going on in Russia and Ukraine right now?
No, I think it's more political. I think it's a direct response to the fact that Loomis had the limelight, not the president, and she was getting these incredibly, broad bipartisan meetings together, and they were getting bigger and faster. I mean, you had Dick Durbin sitting beside Ted Ted Cruz right in the room I was in. I thought I was in the metaverse. I mean, that never happens. They're so diabolically opposed, but yet they were gathering to talk about crypto. And I'm not the only private investor they brought in. But in that room, I couldn't believe how bipartisan it was. It was absolutely remarkable that you have these adversaries that are at each other on every other issue that are 100% behind the initiative that Loomis is putting forward. And there were some really heavy hitters in there. Pat Toomey, Steve Daines, he's Montana, and obviously very important for hydro. Mike Rounds, Roger Marshall, Cindy Hyde-Smith, Colorado, Hickenlooper, Ted Cruz right beside Dick Durbin. I thought that was just crazy. And Debbie Steindow, John Brasso. I'm just reading down the list who was in that room. I was kind of like being interviewed for a job. Warren Davison, Rick Scott. I mean, these are really heavy hitters in the Senate. And for them to show up and it was like, I felt like I was being grilled, but I'm okay with it.
It's remarkable to hear bipartisanship on anything these days. I'm a political science student myself, and that's just not something you see. It's remarkable that crypto's giving them incentive to work together.
Well, I think you got to give credit to the crypto community for pressuring these politicians that represent them into a stance that's supportive. I think that's what happened. It took a few years, but that's what's happened.
I'm all about it. Keep pressuring everybody. Keep supporting those people supporting crypto. I think that's really the way forward for all of us. And kind of speaking on that, I had a little observation. The executive order mentions risk 47 times. It mentions opportunity or opportunities only 4 times. Why do you think that this is?
Well, it's so far the volatility in all cryptocurrencies has been dramatic. And that's a risk, obviously, if you don't have a long-term view. But the reason you have such volatility in Bitcoin, let's take that as a staple, is there's no institutional support. If let's say you're running 100 billion, we spoke that earlier, generally you would put a 1 to 3% position in something like Bitcoin or gold or other assets like that. And if this price corrected, you would buy it back up to 3%. That does not happen with Bitcoin because there's virtually no large institutions owning it. So yes, there's risk in this nascent period, this early period. But when institutions decide to make this an asset class, I would rather be investor before that happens than after, because the amount of capital will come into it and they'll make their own decisions about which cryptocurrencies they want. They may take a portfolio approach. But I would argue, yes, there's risk. I mean, you can put, $10,000 into Bitcoin and have it be worth 6,000 in 2 days. That's happened every year. And so I think Biden was wise because obviously by giving the credibility through an executive order to cryptocurrencies, he wants to make sure that he's not, that he's emphasizing the risk that we all know, those of us participated for years, that is inherent in this.
Yeah, absolutely. My interpretation of it in many senses was that this was kind of an agreement to make an agreement, and that it was a little vague. Uh, but I think that a little vague is a good way to start. Do you think that this was laying the groundwork for future regulation, and maybe specifically with a nod to a physical ETF for Bitcoin?
Well, I think what it really sets off, because I read it multiple times, and I'm trying to read between the lines
Me too.
as to what it says. And to me, it's really about which agencies are going to get what jobs. Is it the SEC? Is it, you know, will it be the IRS? Will it be both? And I think he is setting up a competition in that executive order um, to decide whether the Federal Trade Commission should be involved. It, the interesting thing about the Loomis bill on this topic is it doesn't contemplate NFTs, and yet in Biden saying risk, 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 NFTs, what are they? Are they a commodity or are they a security? I mean, I could argue both ways, right? And we're going to need regulation because it's one of the fastest growing categories. And there's so many use cases for NFTs that make sense to me, but I wouldn't get into them in a heavy way until we understand what the rules are. And that's exactly what this executive order is doing.
Absolutely. I actually wanted to ask you about NFTs. I skipped over that. Kind of your thoughts. I heard from someone that you approve of them, but I wanted to hear kind of just from your words and your thoughts on NFTs in general, maybe where they're going.
So my thing about NFTs is I need a use case. I need a reason that there's economic value in it for me to believe in it. And I'll give you a use case that I've been working on for quite a while now. I'm a huge watch collector, and I have many, many, many watches, some of them extraordinarily rare, some one of a kinds. And I need to have the way it works right now to insure them. This is an economic use case for NFTs. I'm describing to you right now. I have to insure the whole collection, which cost a fortune, but I only need to insure the ones that are on my wrist. So let's say I'm going to travel with 25 pieces. I know that sounds crazy, but I do that all the time. I wear 3 watches a day, 3 different pieces. And I support the artists that make these, and that's why I also believe in the economic value of watch collecting. My collection's gone up 100% in the last 18 months in value, and so I go to the insurance company. I say, look, these 25 pieces are coming with me to Dubai. This is actually happening as we speak, and they say, well, so what? It's in the rider of all the rest of your pieces that are sitting under the streets of vaults in different cities. You're insuring those too. And I said, I don't want to. I'll self-insure those, but I just want to insure the ones that are on my wrist. And they say, well, where are you going? What cities are you going to be in? All of this data could be provided in an NFT, an authenticating NFT that has a picture of the dial, high resolution picture of the dial, all the accreditation of the purchase, all of the information about the watch, where the box is stored, where the papers are stored, everything. And then on my app, and there's a company called Adresta that's doing this in Switzerland right now, I simply tag the watches and the locations they're going to and send that file on the chain to the insurance company. And not just to one insurance company, 3 insurance companies who bid me on the trip, because I'm going to be back in Miami April 1st. I don't need them insured after that, but I'm going to be in multiple cities during that 2-week period. I am so hot to trot on that NFT because that saves me a fortune. And so there's a use case. So I'm an investor in all kinds of technologies that are going to make this happen. And as a watch collector, and talking to the horological societies on both sides of the ocean and the brands themselves, our industry desperately needs this. I was very fortunate yesterday. Sam Bankman-Fried was here in Miami, and we did the hackathon together. We gave away $1 million to high school students. And I was having lunch with Sam. I said, Sam, listen to this use case for NFTs. And he said, yeah, that makes total sense. How do we get involved? How do we do it? And the whole point is, you're going to have people like me coming up with all kinds of use cases for NFTs, not just lazy apes. I have nothing wrong with lazy apes. That's fine, but it doesn't add value to anything. I want to get involved with NFTs where it adds value. And if I can save a fortune on insurance, that's adding value. That's a great use case. And I'm, along with John Reardon, who's a very famous curator of the Patek Museum, he's putting the protocols together and what should be included in the NFT. And some of the world's largest retailers and dealers are looking at that protocol and deciding if they're going to agree to it. Once we have the white paper in place, watch what happens. Literally, that's a pun, by the way.
Watch what I'm on the same page with that. I have not invested in the images or the PFPs yet, but I see a very bright future for NFTs, and I think they're only going to grow in what they do for society. I think that there's a huge demand, and I never even thought of watches or insurance. I think that attests to just the broadness that they can potentially cover outside of just a picture.
Definitely. That's the whole idea. If people are going to come up with their own use cases, the chain is going to provide for the economics, the benefit, the transparency, the ledger, the audit, the insurance, and all the rest of that in the smart contract. And then there's the use case, staying again on something we can all understand. Let's say I own an FP Journe, and I own number 6 of the 10 centigraphs made for the New York boutique. That watch is increased in value. I mean, it's insane what it's worth today. So many people know that I own that piece in the universe of watches, and they would like to get the dial has red in it. I'm known for having red bands and red dials and all that stuff. And they've asked me, can you send me an NFT of that? Can I buy one off you? How many are you minting? And I said, well, I haven't minted an NFT of that watch. So I went to FP himself and I said, FP, listen, would you let me mint a picture, basically, or an NFT of that piece, number 6. And we started this dialogue about what is the legacy for Journe himself. If that watch NFT trades, shouldn't he get a royalty? Mm-hmm. And when he said royalty, I said, you're talking to the right guy on royalty. I would be happy to give you a royalty. And I think that's what's going to happen in the watch world, in the jewelry world, in the pen world, in the rare car world, in the rare baseball card world. The royalties go back to the owner of the art, and they trade in perpetuity. And so I see that use case too, but I'm not ready to go there yet. I never sell my watches, and that's why I get what I get, because the actual watchmakers know that I support the art as a collector. And so, but I think that's coming. Another use case. There's so many interesting things to do with NFTs, and I think we haven't even got to 1% yet.
Oh, completely. Steering us back a little bit to the EO, it does talk about combating illicit activity a good amount. What steps do you see maybe being the most effective for doing that, if any?
I think the first thing is to put policy out on stablecoin and make it a payment process. And here's the argument I made to the senators. Look, a stablecoin is no different than a money market fund, okay? You've licensed those through FDIC banks. You've allowed people to buy a money market on Schwab, a money market account on Fidelity, or wherever they're finding them, wherever they've been regulated. And they're backed by the US dollar and other assets in that fund, and each one is slightly different. Why not license 5 or 10 stablecoins backed by the US dollar to major players in the stablecoin space, a Circle, for example, and others, and then let them compete? And so I, as an investor, and I do use Circle for USDC, it's one of the stable coins I use,
Hmm.
I could use it as a payment system. If other regulators agreed that this was a regulated security, and I could send it to Switzerland to buy a Swiss stock or send it to France to buy a piece of land or whatever I wanted, I didn't have to revert back to local fiat. It would still make the US dollar the defined currency of preference all around the world. It is the reserve currency for every commodity, and oil included. It would become the reserve currency for digital payment. That would be very good for the US. And I think that appeal did not fall on deaf ears at the Senate. That makes total sense. So let's work on that policy. Now, when you talk about illicit use, if you're using USDC, there is an audit trail for every
Hmm.
single transaction you've done. So if you're a criminal, you got to go back to using paper dollars in a knapsack and flying it in a little Piper plane over the border for a drug deal. So the US dollar is used illicitly all the time. But it gets harder to do that in a digital currency that has an audit trail and a blockchain associated with it, where every transaction can be seen. And so then it becomes, can you crack the wallet? And there's ways to do that too. If you believe that it's an illicit transaction, go ahead, investigate it. That would be part of the policy that would provide the license to issue that USDC. Now, when I saw what happened to the truckers in Canada, that was outrageous. That's just not right. And of course, if you had a regulated digital currency, they could avoid that challenge.
Yeah, that was me reading in between the lines of some of that EO. Is the U.S. is, we are the supremacy or whatnot for currency, and by establishing, say, a CBDC, maybe a Fed coin, but I kind of like your idea here by keeping it private. That's a huge opportunity for the U.S. to hold on to that supremacy when it comes to the dollar.
Well, I'm like you. I was reading that between the lines. It made a total sense to me. When I read that, I said, okay, Biden gets the joke on stablecoin. I would rather not have the government developing stablecoin or anything. I'd rather have the government licensing it, let the really smart hands over the keyboards do it, and let them compete. I'm happy to take a portfolio of stablecoins and work with that, write contracts 30, 60, 90 days. Right now you could probably beat inflation with that. And so I just need to be regulated so that my auditors, my compliance department says, oh, we're okay. This is a regulated asset. We don't have that right now. So I'm limited to a 5% weighting in any stablecoin just to get my auditors to sign my statements.
Let's see. So I think we talked about a good amount of these questions I had, but I guess what do you see any impacts that we haven't discussed yet that may be coming from this executive order? Something we might be looking forward to?
Timing. Things are going to get accelerated. The Loomis bill is going to get accelerated. People are going to be talking about, as you said, crypto in a way that we've never discussed it before. We're going to see more compliance. We're going to see a lot more interest in it. We're going to see a lot more dollars flowing into this sector. And I think people are getting into their heads that this is not a coin. These are software productivity tools. And I think when you think of it as a nascent industry, you definitely want to get a portfolio of these positions. So I'm not the only person that thinks this way. Obviously, we're going to get a lot more of this. It's interesting at Bitcoin 2022 that the first day is sold out for institutions only, which is amazing. That's the first time that's ever happened. I'll definitely be there. And I think that's going to be a really interesting day to see all of these institutions who still don't own any Bitcoin come to learn more about it. And really, it's because of that executive order. You got to think about it this way. Biden pushed the stone down the mountain, and now it's accelerating and it's getting bigger. It's like a snowball, just getting bigger and bigger and bigger. But he started it all, and I'm proud that he did it. I think it's the right thing to do, even though the world's a crazy place right now. We all know that. This is an important sector that deserves support.
Absolutely agree. As someone who's been in the space from the earlier days when it was more tinfoil hat kind of conspiracy ish, to see Biden talking about it, to see these senators coming together talking about it is mind boggling to me. The speed at which it's accelerated over the last 2 or 3 years is almost unbelievable. I totally think that's going to continue forward as well. Most of the people out there listening are retail investors. Do you think there's anything specific that they should take away from this that might impact them specifically?
I think the key, and so many investors that I work with have never gone into this at all. I've known them my whole career. Started asking me, how should I get into this with my own portfolio? And I always say to them, look, Start by opening a centralized wallet and a decentralized wallet. Maybe go on, decide where you want to do those. That's up to you. And there's so much great information on all the platforms, including Reddit and YouTube and everything else, that you can start to learn. Take a small amount of money. I don't care if it's $200 because you're going to lose it in the beginning. You're going to get hacked because you don't know what you're doing. But that's okay. It's a learning experience. And once you start to understand how this works, I don't care what you use, but get both. Get a centralized and decentralized so you start to understand how this works and transfer some assets between your accounts. Take some USD, upload it, and buy some ETH. Get into it and start learning. It's so interesting, and within, I don't know, 2 months you can be very knowledgeable. And then if you really go down the rabbit hole like I have, then drill down into the heliums and the Polygon versus Solana versus HBAR and all the rest of that. That takes. But it's definitely a learning experience. And I think all of these wallets are going to get easier. We know with certainty the tax report is going to get easier because it's a mandate now. Next April, you're going to have to show your gains and losses and any staking you've done on your assets. I think that's also good. It's all good. I haven't seen a lot of negatives yet. And I saw the EU. I watched that vote with you just a couple of hours ago. They did the right thing. They said this is crazy. We shouldn't stifle innovation. Even the EU figured that out. They don't want to fall behind. And so at the end of the day, we're going to have proof of work driving technology to a much higher place in terms of using energy more efficiently. And that's a very, very good thing for everybody on the planet.
It's a personal dream of mine to see that come true.
It's coming true. I'm watching the fund flow right now. The Norway model is the new way for mining and data centers. Watch it grow. Watch how fast that grows because there's so much capital interested in that.
I think what a lot of people don't notice is we had no language on this, and now we have some language, and almost without regard to what that language is, just having some kind of clarity is so big. I can only imagine. I love your input for institutions. I assume that's maybe doubly so, right?
Oh, definitely. And so they're probably going to, in the interim, in the short, maybe the 18, 24, 36-month period, they're going to invest capital in the Norway model because that way they can. Remember, the Norway model contemplates that this coin that's awarded is actually staying on the balance sheet of the company. So that way, the value of the underlying equity trades in tandem with the price of Bitcoin. In one other thing in the Norway model I forgot to mention that's very important, it's always been a claim of many people in the mining community that there's no way to make a pure coin. In other words, the network rewards you get when you're awarded a coin come from places you have no idea on how it was mined or how they were gotten. It could have been, carbon coal burning facility in China. You have no idea. But in the Norway model, they have figured out a way when they get awarded the coin to strip away the network awards, and they call that the slag. They sell off the slag, give it to charity, give it to the hydroponics for the tomato growing, whatever it is they do. They remove it from the balance sheet. So what's left on the balance sheet of bit zero, which is under the the mandate of the Norway model, is only pure coin with no slag, no network awards, pure 100% mined with excess hydro electricity. To me, that's the perfect way to own Bitcoin while you're not allowed to own the actual coin. You own the equity.
I think it's amazing. Apparently, we have a lot of questions. Sorry to derail us a little bit. We know you mentioned being an avid watch collector. People are asking, what watch are you wearing today?
Oh, today, I just, because I was talking about my trip to the United Arab Emirates, I had about 40 watches with me. I just took them to the bank vault and I pulled out 22 that I'm going to take on the trip with me. And right now I'm wearing a Daytona steel with a red band with a black dial. The black dial was not the most popular Daytona 2 years ago, but it is now, if you look at spot trading in the open market, it has surpassed the white dial. So these trends change, week to week, month to month. But the Daytona, the classic Rolex Daytona, made famous by the Paul Newman auction a few years ago at over $17 million, is now one of the hottest watches in the world. And it's not the most expensive. It's just impossible to get. And I wear it with pride. I love it. It's one of the Shark Tank's 8 that I always wear each year. and it'll probably be on Shark Tank again. I will also say that there are some great new young watchmakers coming on the scene. One out of Australia has made a one-of-a-kind skull out of sapphire, again for Shark Tank. It's a tourbillon. Avanti's the name of the company, and I really want to support these new watchmakers that are coming on the scene with these really crazy pieces. And one last thought: I don't know, this happened at Bitcoin in 2020. Omega brought a watch to market, the classic Speedmaster, the Moon watch everybody knows, but they made a Snoopy model, and in the back of it, there's a crystal dial, but not the front of the watch, the back, where Snoopy's riding on a rocket to the moon. And that was the year everybody said, to the moon. Remember, that was the
Mhm.
phrase for crypto. That watch exploded on the scene. It was a $9,000 piece. You can't even get one for $40,000 today. I mean, it's just gone insane. Now, I just got my Snoopy. You know, I'm a supporter. I wait my turn, and I'm going to wear it at Bitcoin 2022 to the moon, baby. That's where we're going.
Well, I'm wearing my Apple Watch. I do have a vintage Oyster Rolex, but I haven't actually had it appraised yet. It was handed down from my father. Just a little fascinating side
You have
story.
no idea how valuable that is. Any of those vintage pieces are incredible. You should take it in, get it serviced, but do not have it polished. Do not polish it. The patina is what gives it its value. And don't mess with the band. Don't polish the band. Don't do anything. Try and find the papers for it. If the box was available, that'd be even better. And then just keep that, because it's only going to go up in value. I think it's so interesting what's happened in the watch industry because, you know, look, I'm an Apple shareholder. I love the company, but I would never wear that watch. That watch makes you 20% off retail the minute you walk in a room. So take that off your wrist and put on a real piece.
Well, I'm going to Bitcoin 2022 as well, so I'll have to take that note. I'll wear the Rolex instead. Maybe you can take a look at it for me.
Yeah, absolutely. Check. I'll be there. You know, I'm actually going to be at the Norway model booth. BitZero has a booth there, so come on by and say hi. And they're showing off all their stacks, pictures of the Norway facility, the new model. I think that's the greatest thing, and you're going to see lots of other miners doing the same thing. I think the Norway model is the future of data centers, and we've talked about it today.
I do too. I've actually long pondered that through the years. I thought that Bitcoin proof of work is going to be the driver for cheap renewable sources of energy. It's great to see companies seeing it the same way. You know, that I think that the future has a lot to benefit from this space, and it's finally being recognized.
It's great. It's all good news. It's been so volatile, but I think we're in a good place right now.
I do too. Is there anything else that maybe final thoughts or anything for the order that you'd like to include, or even what you're doing at the conference in April?
I think I'm going to be addressing the institutional issues around the new Norwegian model, or the Norway model, and you know, and talking a little bit about the direction of fund flows, and of course the Loomis bill, and the order itself. A lot of people are trying to absorb what it means, and I'm glad to be there and be a participant. I think it's a great place to exchange ideas, and lots of others will be there too. So I just sign off on that saying, if you're interested in this space, come to Bitcoin 2022. I think it's going to be the largest conference of its kind, because certainly Miami's the place to be at that time of the year. It's going to be beautiful here. And I look forward to seeing all of you who make it. And thank you very much. We had a great hour.
Yeah, man. Thank you so much, Kevin. Guys, Kevin O'Leary, amazing. Check him out at Bitcoin 2022. I'll be there as well. And I guess thank you guys for listening in, and we look forward to having you back, Kevin.
Take care. Bye-bye.
Cheers.